Good evening, everyone. Welcome you all to the webinar series, Fintech to the day one webinar series. Today we are going to discuss about the topic Fintech disruptive innovation. And today we have our speaker, Dr. Sangeeta Gunashekhar, Associate Professor, Amrita School of Business, Coimbatore. Over to you, ma'am. Welcome to the webinar series.
Thank you, Rohan, and welcome to all of you. Thank you so much for taking your time out to be here with us today. Um, what I really plan to do today, in the time that's given to me, about an hour, and see what's happening in this sector. And at the end of an hour or so of the discussions that and be inspired enough to go out and learn more and keep your mind open to the new ways of doing things and the new things that's really coming up. So let's begin with the discussion. The way I want to do this discussion today is first give you a little idea of what is fintech and why fintech, particularly now. What really happened in the financial institutions that they really couldn't do it, and we really looked upon fintech to take over. And from there, we will look at a little bit of trends, global, and see what are the different things that's really growing. It's not going to be detailed on anything. It's more of a broad spectrum that I have actually brought in today. But I'd be happy to take questions in the end, and we could take the discussions wherever you think is comfortable. The way I would like to define fintech is three words that come to my mind: innovation, disruption, and today it's inevitable. Let's go through the talk and see if my definitions actually make any sense by the time we finish this up. So let's start with the basics. What is fintech, right? So as defined by the Financial Stability Board, fintech is technologically enabled financial innovation that could result in new business models, applications, processes, or products with an associated material effect on financial markets and institutions and the provision of financial services. A little long of a complete definition. Let's just take something that's a little more easier, workable definition, which I really like. That's application of a variety of advanced technologies that support the development of financial industry. That's as simple as what is fintech. So what was really happening? Why do we feel that this is so different from the traditional banks? Were the banks really not seeing this happening? Was it the case that banks really saw a fintech as something that was out of the space, coming in, hitting them, and disrupting the entire ecosystem that they were so used to? I mean, today you millennials really call this a draconian kind of banking system. So was the banks really that bad? They really couldn't see what was happening? Actually, that's not the way things were. Because if you see, the banks have always been at the forefront of adopting new technology, bringing new things into the financial services or institutions. And the reason is very simple. They deal with the most important thing that's really, really dear to all of us, and that's money. So if they are dealing with something that important, which could kind of bring down a whole economy, then of course they're going to be on the technology forefront. Banks have always, or the financial institutions at large, have always adopted new technology, have been at the forefront, have always been there doing these things. Yet, how come they really didn't see this fintech growth, or is it that they really didn't see it? Was it that the banks couldn't do something about it even though they were aware of it? So all the new technologies on and the new ideas that we really talk about today, which is evolved the fintech and the big techs around it, has been there for some time now. It's not that the banks were not aware of these things, be it the blockchain technology or the big data analytics, which is the biggest way in which the world has moved today, where they're able to identify specific needs of customers, be able to understand what a little group of people really want. They want, somebody wants a small insurance. They want to travel by car, say from Bombay to Delhi, and they just want insurance for that part. Somebody else wants something else. Maybe they're taking a flight to Connecticut and they want a baggage insurance, but they don't want the entire thing. How do you understand these things? So it's really the big data analytics which has really pushed the evolution of understanding the customer better, knowing what they want. So why was the banks not knowing what they wanted? Why was the banks not able to do these things? It wasn't that they weren't able to do it, but they were more stuck in their own technology. Yes, banks had invested heavily and they were the forefront runners of technology adoption. It's just that they didn't take, or they didn't realize the kind of customers that they're going to be facing very soon. And they were already stuck in their own homegrown, personalized, patented softwares, where they had spent so much of money on developing these things, connecting across the branches, connecting different services, having those servers, huge servers installed in there, probably the vaults under their corporate offices. Now, for them to be able to cater to a small group of consumers was getting very difficult. So, who are these people who could help? There was a lot of growing demand around, but the banks per se were stuck, and the consumers were stuck in some sense that they were forced to take only the products which the banks were allowing them to take. They were stuck with one account with a bank and work with that bank for all their services. So it's the people in the banking and the financial institutions who saw that these customers were not very happy, banks were not able to help, and so why not come up with this new product which could be a win-win situation. And today we see the way the technology has gone. Earlier we used to go to a bank to get an account open, to get all the documents, signed, and give them a couple of days to open those accounts. But then you do today with a very simple mobile app, and you have a eKYC where the AI is being used. And AI is used all across the financial institutions today. Many things that your mobile phone today allows you to do through AI, and including research on what are the new products, what you really want to do with them, where do you want to go, comparing the interest rates, comparing the different kinds of products which they are giving you, all that using a chatbot. So banks, yes, they knew it, but unfortunately, they just couldn't cater to these demands, because what banks really saw their customers was more of uh, a generation which walked into the bank, made some plans, talked over, discussed, looked at options, and then really taken those decisions with more diligence, more carefully planning. What today's millennium really want to do is probably eat sushi and do their banking, look at their banking statements, or do their banking activities over the mobile phone, pay their bills, send money across, get some subscriptions, maybe even an insurance for the next day travel. So there's a lot of things that the millennium really wants to do with a mobile phone, which wasn't there earlier. And why is this so? Because the generation really grew with the social media around it. For you kids out there, mobile phone is the thing. I mean, you don't think twice before downloading an app and actually using it. And anybody would vouch that you kids know much, much more about these mobile phones than any of us. Ask my students and they'll tell you the 100 things that I could actually do better using my phone, and I don't really do it. That's the way it is. So when the generations moved, when the younger generations were more comfortable with using their mobile phones, the smartphones, and new technology, more on social media. They really wanted to be self-reliant. They didn't really want to go into a bank, sit with some suited guy to understand where they should invest, what insurance to buy, plan like for an year, and think about the premiums that they have to pay every quarterly for an insurance. That's not the way the millennials work, and that really changed the entire way the financial institutions and the services are now being rendered. So this is a very wonderful survey which was done a few years ago, slightly old but gives you the picture, where you see the millennials prefer doing everything digital, right from researching on a product to applying, submitting documents, and paying upfront. Everything for them is more digital, more comfortable than actually walking into a bank. And with the financial crisis which happened in the 2007 and 8, the trust, the loyalty which was attached to these, these big giant institutions, financial institutions, came crashing. So on one hand, you really didn't trust them to be keep your money safe, and on the other hand, you were really looking out for different ways of doing things and have it a little more personalized, and have it because I want it the way I want it, not because there are 10 other people who really want it in the same way. So these are the different ideas which really came from the consumer, which changed the way the financial service industry was looking at serving the millennials and also the Gen Y. So what were some of the trends which was being seen? And I've picked all these from a McKinsey report. The references I've given later. First and topmost is that this generation thrives on social media. They don't want to walk into a bank. They don't trust the banks. They don't. There is nothing called as I'm loyal to this one particular bank, and I'll wait for the bank to give me that product in the way I want it so that I can use it. No, that's not what this generation is. This generation is a social media savvy generation, knows what it want things light, be able to seamlessly move across applications in the mobile to a tab, and do my business sitting where I sit, rather than go find a place, find my computer, and be able to do these things. Largely preferences in mobile solutions. More importantly, I know what I want. I just give me space enough. Tell me what your products are, and I'll choose myself. I'm a more self-service person. I don't want to sit across somebody who's trying to tell me what I should be doing. With a rapid urbanization, you find more young people taking jobs, and this new model which is now coming up is pay as you use. If I'm going to be using this one particular insurance, I want to pay only for that particular insurance. I don't want to take the entire package of insurance and pay all these quarterly bills and then find out that when I really need it, they're not going to be paying me. A few hundreds for my travel baggage, I'm fine with it. Can you give me that product? That's the pay and use product. And that is what is more common today. Personalized service. I am traveling by car from this distance to this distance. I don't have a car. I'm going to pick up this car. And can you now give me insurance for this travel? And from there, I would be probably picking up a train or a flight. So I don't want the entire, my way to be insured. Also, the growing economic power in the emerging markets, India, Africa, and so many of those emerging markets, where you find a growing middle class, more disposable income, more people who want to be using their money in different ways so that they can get some kind of returns, and they want to be diligent about where they use, how they use it. So these are some of the key trends that you see in the consumer behavior, which kind of evolved and moved the fintech industry to really take off and grow. Now, this is another survey which was done by Capgemini, wonderfully capturing the different customer preferences, why customers prefer the new challenger banks over the traditional banks. 70% of the respondents said that for the topmost thing was that it was a low cost offering. Definitely a low cost offering, because you don't have all those transactions expenses that you have to go through to open an account, or to be able to do a transaction, to put your money into the bank, to get a DD or to get an insurance. This is so much easier now when you have everything online. Ease of use, of course, everything is on the app, and much faster services. I want to do a couple of transactions. I want to send money to a few of my people. I also want to pay a few bills. I want to add up some subscriptions. I want to remove some subscriptions. I can do all of that very quickly now. Whereas if I had to go through the bank for that, every transaction would take me time, and I wouldn't be able to do a few transactions directly at all. Whereas now, with different apps being able to talk to each other, compatible with each other, I can now do these things. And that's why the generation really prefers challenger banks than your traditional banks. Over 48% of the Generation Y and tech savvy customers actually said that they would be switching their banks this year. Why? Because the banks don't really offer varied products and services, they don't meet their needs or preferences, and most importantly, they don't integrate well with the platforms and the apps. So if I have one bank app, I cannot be expected to use only that app to do all my functions. If there is another app which helps me do my transactions digitally, I want to connect my account to a digital platform, I should be allowed to do it. And if the bank doesn't really allow me to do it, I don't want to be part of the bank at all. There is hardly any personal relationship with the bank these days. People just don't really walk into a bank. I mean, if I now ask you and throw this question as to how many of you have really walked into the bank in the last few months, or maybe let's say even before pandemic, I really wouldn't get too many hands up out there. So the same thing with the survey. 50% of the people felt that there was no personal relationship with the bank. All in all, the idea was customer experience what really mattered now. It is the customer satisfaction and customer delight which is at the forefront, and that's what is really leading these fintechs. So what was it that these entrepreneurs were doing? And the new generation entrepreneurs, if you see, very young, extremely tech savvy, know what the products are, know what the demands are able to create those little small products, but $1 billion businesses. That's the fintech for you today. That's the new generation entrepreneurs. They are not really afraid of thinking, of doing new things, of being able to build a small idea into a very big enterprise. And that's the space that we're really talking about when we say fintech. It's all those services which are using the new technologies to be able to do any financial transaction is the fintech story today. So what's the banks really doing? Banks have taken a step back. We still need banks. You can't say that we don't need banks. Of course, we need the banks. There are many functions that the banks do, and they are very important to our economy, especially if you look at it from the macro perspective of controlling inflation or the other aspects of it. We do need our banks. And not just that, there are many other functions that they do. So what the banks have done is they've really taken a back seat. They're doing all the banking work, but they have left the customer front to the fintech. So what we really see today is that you're still dealing with banks, you're still working with your money, which is there in a bank account, because all your fintech is still an NBFC. You're still doing a lot of transactions, but much easier way, much simpler way, using an app which is your front end and the bank which has taken the backside. That's the way the story of fintech has really grown across the world, and definitely in India. Now, this is just an overview of the different services which are given by fintech. Again, this is picked up from one of the reports of, I think this is Deloitte. This just gives you an overview, but this is not everything. Okay, the first, of course, first and foremost is your personal finance, where a lot of chatbots have come now. AI has taken up this space where you want to look at your account, you want to look at simple things, your balance, what you've paid for, where did the money come from, did I get paid for this, did I make these payments, all those, personal finance, the basic bills and, tracking your accounts. That's completely happening today using a mobile phone. You don't have to wait for somebody to pick up a phone on the other end or walk into a bank to actually do this. You pick up a mobile 24 by 7 and you can look at your statements very clearly. The next one, which is the payment and billing, which is the thing that really drove the fintech up there, is the digital payments sector. Uh, Payments were one thing that really people wanted to do on the go. And having a secured way of making payments, either using a mobile phone today, you use your biometric, or those cards, you swipe them, you wave them, right? All of those are digital payments. And to be able to do that kind of a technology is really what drove this fintech to the way it is today. Particularly, the pandemic actually helped India move more to the digital, the contactless payments. And one sector which really grew even with the pandemic is the fintech, especially the digital payment sector. The so far all our fintech, always the lead was digital payments, but recently the trend has changed to lending fintechs which have taken the leap forward. Now, what is this lending fintechs? There are many of us who don't have a credit score for various reasons. Maybe sorry, I don't have a business, I'm not a regular employee, I'm a more freelancer, I'm trying to start a small business, I'm a young student, or I am a housewife and I just want to, I have some money that I really want to lend out, but I can't do any of these things because I don't have a credit score, or I don't actually fit into the traditional banking sector. And here comes your lending platforms, which have given you the opportunity of both borrowing and lending online through mobile apps or through your lending market spaces. And so beautifully, this sector has really developed because the regulations are still very small. They really need to grow. The markets have to mature. The fear here is that two things. One, money laundering, and the second is that the money would come in for impact, for affecting the security of the country, and that's something that's has to be regulated. So apart from these, I think the other concern is that somebody will take your money and run away. What if I am a housewife and 50,000 housewives, we put in some money into a one lending marketplace, and then suddenly we find that just shuts down, it's only a website. So there are some regulations which have been put in place, but the market is still very, very nascent. It's like the chit fund story, but the difference is that chit fund really didn't go internet way. It wasn't able to connect with people who was all over the place, dispersed, and be able to do these things. So the lending is something that's taken off very hugely in India. I could today borrow few hundreds to few thousands of rupees, 2 lakhs of rupees, and I can borrow to pay my maybe just this month's electricity bill and then pay back by next month. I can borrow at different interest rates. I can borrow for my business, but I can also borrow it at different levels. One where I can borrow at a higher level interest rate. The second, I can borrow a smaller amount of this whole thing, but now at a lower interest rate. Both are possible. And that's the best part of having this entire marketplace today. The next is, of course, your insurtech, where the technology is the thing. It's booming out there, especially AI. Imagine the scenario where earlier you had to have automobile insurance that you take, and suppose you have a small accident on the way to your work. Okay, a two-wheeler, he bumps you at the signal and moves off. You really have to stop, check check out what happened, and you find that your bumper has been hit. You are insured. You've been paying, say, maybe 4 or 5 years now, and now you want to take the car and get this thing assessed. So you'll have to take it to the insurance company, see that it's assessed. The checking inspector has to assess it. And once it's assessed, then you'll have to take it to your mechanic. Probably the whole day is gone. You'll have to take a leave, and plus your mechanic would probably give it to you. It'll take you 2 or 3 days to get your car back after the insurance company and the mechanic decide what is this payment that you're going to be getting. But that's not the story today. Today, with an AI app in your mobile, all you need to do is take a picture with the AI based app. The AI will assess the kind of damage that has been done. Within a minute or so, it tells you what is the money. It also settles your insurance and you get your money. You don't even need to go to the insurtech to get your money. And from there, you can move to your mechanic shop. If you think that it has to be fixed immediately, probably take half a day off, put your vehicle with the mechanic, and by the next day you will have it with you. That's the way the insurtech is going. Another very interesting thing about insurtech is it's not an entire product insurance. For example, you're an executive, you travel a lot, doesn't mean you need to take an insurance for a bulk, in all of my travels. I take it for every little thing. I'm going into a more let's say I'm going to land up in Congo and I'm not really sure of that my luggage will be transported to my hotel safely. I could just take an insurance for that. I'm traveling air, I could take an insurance for that. So every little thing, a few hundreds is all that you need to be taking different insurance, and you can look at the products, you can see what fits you, and you can do it on the go. Same with the reinsurance story. And the next is remittances. The biggest challenge was financial inclusion and remittance, particularly remittances. People leave their country, go out of the country, work, and try to send a little money home every month or a few months in few months. There are some expenses where the family comes up with. Maybe somebody wants to start a small business, somebody wants a little money for the education, or somebody else is unwell. And when the money is being sent from across, there's a lot of money that was being charged for the transfer. But with the fintech, these charges have come down really drastically. One country that's really benefited from this is Nigeria. It's a great story to look at, where remittances are much more than actually the aid package that they were getting for development of the country. Now, what's the difference between an aid package and a remittance? When remittance comes in, let's say in a village, say for example a business or even for a temple program, there is more responsibility, there is more attachment to what's happening over there in the ground, and it works better than an aid which comes in to start a self-help group and are given by the government, where they try and get themselves involved and get responsible. Remittances is a more sure way of seeing that they are responsible for what the actions that they have borrowed for. Blockchain or crypto assets, and that's like the thing today. Budgets have again brought that right on the center. We have in fact a surprising result for me, at least, when my students presented this in my course. I teach a course on fintech to the second years, and they do a term paper where they make presentation on one of these sectors that they pick up. And when they showed me that it's the large part of investments that are happening in cryptocurrency in India is women, a little older women, 30 plus, probably more of housewives. That was something of a surprising results that I saw when in their presentation. So cryptocurrencies today are a part of crypto assets. We have some very good crypto exchanges in India today. And yes, government has just announced the taxation on it, making it very clear that it's not going to be a legal tender. Legal tender is something that is backed by the central government in India, and that's the RBI, which has to back it. So right now we only have our, the fiat money, which is backed by them. Probably they will be coming up very quickly or very soon by 2023. That's expected. Is the central bank's crypto currency, and that would be interesting to see how that's going to play against the other currencies, and especially when you have exchange to be done across borders, how that would really play the entire market. Yes, that would be another disruptive, inevitable addition to the fintech story that we're seeing here. Capital markets, always the forefront runners for technology. So you see algorithm trading, you see the brokerage today. Yeah, you have apps. I mean, that lets you, buy stocks for very small amounts, invest. You can sell. You can do anything that you want. You don't really need, a broker or a guru to tell you, this is what you should be doing or that's what you should be doing. You also have a lot of apps that gives you information on what you should be doing, the different kinds of research that comes out over there. And if you're following very closely, you could make some good money out there. Wealth management or wealth tech, that's something that's been on the growth in India. Where do you invest? How do I grow? And there's plenty of platforms which have grown. Mortgage and real estate, another big sector where it's always been big, and the financial crisis really proved it. It's still big. So when you're talking about taking a home loan, you're talking about, I have a house and I need to assess it. The GPS coordinated way of doing it today is a much more efficient way. What location are you in? What's the size of the house? What's the going rate over there? Is it connected by roads? How far is it from the city? I mean, all of this is very easily done today. And you have several lending platforms that give you these loans today. You don't really need to go to the bank and the traditional way of actually doing them. The most important, the RegTech. It's a very new coming area, I would say. It's really not in yet, though people are really struggling on that. RegTech is more of a regulation technology where they're trying to beat the tsunami of regulations that these banks, financial institutions, and companies have to meet. You have so many compliance that you really have to keep up with. And if you're a startup, you really don't even know what are the different kind of compliances that you're going to be getting into. So they're trying and automating it. They have automated it to a great extent. And if you're doing business, say, across 3 or 4 countries, then there are different kinds of regulations. Each country is going to be even as simple as a crypto asset, very different across countries. So how do the companies or how do the investors really keep up with it? And that's where your RegTech comes. And now the next thing in RegTech, which has come now, is the SupTech, supervision technology, which is how do you supervise these firms or the fintechs to do their jobs. So this is what we see as a sector-wise of the huge growth of this entire fintech story. So let's just look at, we've been talking so much story. Let's just look at some numbers and see what the global trends are and how India has fared here. If you see, this is a recent one, 2021, this is quarterly data. And you see here, there has been a dip because of the pandemic in the 20s, but then it has picked up very well. That's VC venture capital and a lot of mergers and acquisitions. That's the biggest way of going into it, and private equities who are really investing in these fintechs. So when the fintech grows and it matures, and you find a lot of M&As happening, particularly in the area of lending in digital currencies, you see a lot of M&A today. Now the numbers here give you the deal counts, so you can see that it's on the rise. You can also see that the deal values in the billions of dollars is also on the rise. This is just a one snapshot of the global fintech investments in 2021, which was $98 billion. This is 1 year across 2,456 deals in a year. Now this is for India. If you see the similar story, I mean, you see a sharp dip, but then it's risen really high, way above even 2017 levels that we were. And the total numbers here, if you see, we have about 150 fundings, and 150 is the number of deals, and the total funding is about $3.1 billion in 2021. The year really started off very well with the $2 billion deal, which was immediately right in the first 1 month. So despite the pandemic challenges, we find that the domestic fintech players have attracted about $2.7 billion in 2020, which is pretty much the second highest after the 2019 peak. In fact, this year it's it's done better. And then you have these lovely unicorns which have grown now. And unicorns, there are quite a few unicorns. I mean, all the techs, there is many. Large section of that is fintechs who are there and who will continue to be there in the market. Now, this is a fintech hubs which are being ranked globally, and you see in these hubs that there are at least two Indian hubs which have been named in the 7th and 10th. That's the way the India is, and that's where India is in the fintech story. I'm not sure the slide is very clear, but I just picked it up straight from the report, and I thought it's an interesting way of looking at it. These are the top 10 fintech deals in the Asia Pacific, very recent data which has come in. And you see here, 4 of these are in India. On number 3, you have the Pine Labs, a swiping machine that you've seen there, right? That's the large one. Then you have Cred, which is an aggregator for your payment transactions. You use Cred for your credit cards, put all the credit cards out there together, and if you pay on time, you get some coins, and that you can use as rewards. Then you have Razorpay, one of the real growth story if you want to see the story of fintech. And then you have the Credit P, which is based out of Bangalore at an estimated valuation of $153 million. So that's India, and that's fintech for you. Now, how is the Indian consumers or the regulations, and what are the different markets the way we see? So why India, first of all? Well, this is a story that's been told many times, but it's still interesting, and it's India. So just go ahead and I'll repeat the story again. The adoption rates have been one of the highest in the world. Mobile connections 1.51 billion, and internet users 624 million. So 45% of our population actually have use of internet connections. If you see between the age of 16 to 64, the banking and financial service app is 32.3 million. Almost everything is above the world average, and I'll show you a graph to to corroborate what I am really saying. This is a mobile payment services, which is 36.9%. Highest fintech adoption rate globally, and this is the current data, which is just I just picked it up today morning. 87%, and third largest fintech ecosystem globally behind US and China. That's India, and that's why it's India and fintech today. This is a story on financial inclusion. Percentage of population age 15 plus. 80% or so have an account with a financial institution. Not a new thing, but government has been really pushing this. 3% have a credit card. Huge opportunity. And today afternoon, there was a news item which came out from the RBI that they are really looking at going completely the NBFC way for credit cards. So far, even if the NBFC, which is what the fintech comes, if they wanted to give a credit card, they had to have a backing of a registered bank or a financial institution. But maybe in the near future, we might have NBFCs who will go and give the credit cards without this backing. So that's trying to cover, that huge gap out there, because credit is something that we need is small amounts. It's not that everybody is going to take credit and run away. Large number of people take credit and pay back, because the more you pay back, the more you build your credit worthiness, the better credit facilities you will get at a better interest rates. So obviously we would want to continue to do that. So credit card is one very nice and easy way of doing it. Mobile money account is about 2%. Huge opportunity for growth, and that's why India is so interesting. And making online purchases about 4.3%. So as of December 2021, India has over 17 fintech companies and have gained a unicorn status with a valuation of about $1 billion. So in overall, we have more than about 4,000 fintechs, if I'm not wrong, 17 of which have already got the status of unicorn in India. Now, this is very interesting data again, Capgemini's. They show the global averages and the Indian averages. And if you see here, the fintech, this is the Indian average, this is the global average. We are way above the global average for Gen Y. Similarly, over here, the big tech also we lead the way much above the world averages. And what the Indian consumers are really looking for is access, convenience, and personalization. That is very easy for the fintechs to do rather than the old school traditional banks to be doing it. Now, this is importance of for the customers, the channels through which that they really work. And I think I'd already told you the story of the tech savvy being more on the mobile rather than the other ones. In spite of having these demands, in spite of being strong with that social media and tech savvy generation that we have, the customer side, when you look at their experience in India, there's still a lot that lacks. Many things that have not been addressed yet. And this is the positive experience for customers with their mobile app is only about 52% when you look at tech savvy. Again, through their websites is still very low. Same with the voice assistant and chatbots. So there is a lot of scope for improvement here, especially for fintechs that really want to survive and go the customer delight story. Now, these are regulations. Some of them, these are not exhaustive again. I've just put in a few things which helped the growth or evolution of fintech here. Particularly, I want to draw your attention to the video KYC, which was approved by RBI, which is something that's really leapfrogged the entire fintech evolution or even the digital payment evolutions in India. These are again a few of the other regulations which are there. I'm not going to go through the regulations one by one. There are plenty of them. The idea here is very simple. There is no one unique body or one unique regulations under which the fintechs are regulated. Multiple regulations, multiple issues, and especially when they're a startup, the risk of non-compliance or the risk of falling off is much higher. And that's where the space of regtech and subtech really comes in. The sphere or the issues that they're really facing today is the cybersecurity, fraud control. Even in the international arena, you don't find one regulation. In fact, India is the first country which has had any kind of taxations of this kind on the crypto assets. So in India, largely RBI is regulating it, but there are other regulations which also regulate the fintech story. So how are the fintechs really growing? How are they managing this? It's the data story. So they're trying to take baby steps and trying to understand how the markets are, collect the data, the big data story, the analytics, and then move forward. It's a slow moving, but it's a leapfrog because of the technology. And in some sense, the pandemic actually has pushed India into a place where these technologies have become more inevitable and have more acceptance than it would have had the pandemic not been there. So how is the growth opportunities in India? This is how the sectors look. In fact, this has changed a little bit now. Lending has gone up. These are just the numbers. This is 2021 January. Payments was higher, and you see the rest of them there. It's still big numbers, right? And this is a breakup of startups for 1 year. That's 2,174 startups. You can imagine how the space is. If so many startups are there, how many will survive? Only time will tell, but they will be enough to give us the kind of services that the customers are really demanding. So now I really want to move into a little bit of the sector spaces just to give you some little ideas of where we are going, but I'm not going to be doing a lot more detail. I have about 10 minutes and I don't want to be going into too much detail out here. First is the digital payment and payment interface. Basically the idea that money can be transferred online and I can do this with very reduced fee and very securely. The growth opportunity is more here for the banks and the fintechs to come together, and we are already seeing that happening, but we'll see more and more of this in the future. The jobs here are going to be very interesting, both for the finance kids and for the others, because everything is needed over here. And now the latest one, buy now, pay later, is something that Indians already know this thing. So it's not difficult to sell this idea in India, and that's the biggest thing that we probably will be seeing in the next coming years. And these are the different modes of the digital payment that we already have in India. Banking cards, your Aadhaar enabled payment systems, UPI, mobile wallet, micro ATMs, right? So these are all something that we already are seeing it. What we would be seeing in the next one is your buy now, pay later story. The next is the InsurTech, which I get fascinated when I talk about the InsurTech, because insurance is one absolute pain. Nobody really likes this sector. The minute you think of insurance, you think of boring and they're not going to give me the money, very low on trust. But today it's a very, very exciting area where you have huge innovation, new technology, AI based, and which allows you to do these things so seamlessly, so borderless, and very, very easily done. You also have some great aggregators that lets you compare these products, decide what you want, and then do it. I've just put in some of those aggregators I've put in out here. This is not exhaustive, and all of them are there in India. So what is it that we're going to be really looking at here? Again, a lot of jobs which are going to be coming here, because it's an AI driven technology. AI needs to learn. A lot of people are helping the AI learn in some sense by actually using those apps. Yet, what are those, the meaning of those words, and how we can build new products, the interest rates and other things. There is a lot of space there for human intervention. These are your insurance. As I said, I just love this sector. So I have another extra slide out here showing you the ecosystem of the insurtech. Everywhere you have them. I mean, the homes, rentals, to your business insurance, your life and health. That's the major one today. So it's just an amazing area, and the growth is just going to be a marvelous growth that we're going to be seeing in the next coming years. RegTech, a new thing. To me, it still seems new. Maybe I am old, and that's why this looks a little new to me. But they're already there. You have a lot of fintechs who are doing your eKYC, looking at your for compiling or compliance with different kinds of your regulations, be it CRR to SLR to GST or across border. You're sending. I mean, today we have a blockchain technology which has been used to do an export order in Malaysia. So that's the kind of stuff, and there the RegTech is going to play quite a big role out there. The next that I really, I'm sorry, I'm kind of a little rushing through because I don't want to miss the questions that that would be interesting in the end. Is the P2P lending, which is taken off really nice in India. It's an absolute leapfrog. Here I've just put a snapshot to show you the kind of loan amounts which are available. What kind of interest rates are there? These are the platforms that you see on the left end. And the tenures, if you see, 3 months to 6 months to 24 months, 36 months, you even have 1 month payments that you can do. And the registration fees are very, very small, very nominal. So you can actually go browse, see if you want to lend a little, small amount of money, 1 lakh, 2 lakh, to borrowing the same kind of money just to meet your little expenses. And you can also see different interest rates, see if it works out for you, or just leave the platform and go hunt a little bit more. Another interesting area is your crowdfunding. So what is it that you really get in the crowdfunding? You raise funds from a large number of people. It's like asking your friends and family to pitch in for a certain kind of expenses. That's pretty much the crowdfunding. You could also have it in the donation format today, but you could also have it in the format of a debt or an equity. And this is basically a dashboard that lets you personalize your cause, lets you talk to the crowd, and let them participate in funding your project or funding your heartfelt campaign for some kind of a medical expenses. So you also get the help of a campaign manager if you really want it. You can do it from different mobile apps. You can do it online. But it's extremely friendly way of actually, interacting with a huge crowd, telling them about your idea and being able to raise funds to actually, go your way. So these are just some companies that are doing very great in the crowdfunding story. The most interesting, I would say, is a crypto asset, and I'm not saying much about the crypto assets because this has been there in the news currently. You can see this is just the tip of the iceberg. There are at least about 30 to 40 different crypto assets that you find today. This one I picked up today morning. Look at the prices. You can see their market cap. You can see how much has been traded. You can see the different trading exchanges. In fact, here if you see it's only coin switch, but if I click on this +8 option, you get all the other options where you can buy or sell these assets. And as I said, it's been of late in the news because of the taxation, because of the way the government is bringing in, and it's a great step forward because the story that I've been trying to tell you is you can't really hide. It's there. The fintechs are here to stay. Yes, we need the banks. Are the regulations able to take advantage of these fintechs? Are they able to actually use them and be able to build a very trustworthy, strong financial markets in India? Or are we going to allow the rigging of our regulations and the markets and build a very unsafe place for all of us to play in the financial markets? Now that's the story that's going to unravel. So it's a wonderful step that the government has taken where they are trying to bring in some kind of regulations. It's still very nascent. It's not easy trying and bringing these regulations and controlling these things, but it's a step forward, and that's where I think we are today. The next big thing that I'm really waiting for, and I would be talking to my next batch of students whom I would be teaching this course, is the digital currency, which would probably be coming in by the next year. The last thing, of course, is the AI. I could not talk about this. In 2016, we launched Lakshmi, which was the first bank AI app launched by the Citibank. And today we have chatbots for all kinds of things. An amazing place where India is today. All banks, all fintechs pretty much have a chatbot, and the millennials, I don't think you even realize that we didn't grow with this kind of a technology. This is wow to us, new to us. But you people out there are just, it's there for you, and it's not a wow factor. And it's you to whom the fintechs would be catering to. It's you who would be making this space much more special, much more bigger, and that's the way where the jobs or where your intellect is going to be used in the coming years. So I want to end with Brett King. Banking has to work when and where you need it. The best advice and the best service in financial services happen in real time and is based on customer behavior using principles of big data, mobility, and gamification. That's the new you millennials and the fintech story. Thank you so much for being here, and I hope I could inspire you enough and open your minds enough to be able to go out there and learn much more. Thank you all. Now, and over to you. I'll stop the presentation too.
Thank you, Sangeeta ma'am. Thank you for your session. It was a wonderful session.
So do we take questions or end?
We can end, ma'am. So far, no questions have arisen.
All right. Thank you so much. Thank you for having me, and great. Thank you.
Thank you.